So after the Iowa caucus and the New Hampshire primary, it's starting to look a lot like the 2016 presidential race might be Donald Trump versus Bernie Sanders. With this in mind, I thought it would be a good idea to take a look at what is, for a lot of people, one of the most important deciding factors when trying to decide which candidate to vote for. I am, of course, talking about tax plans. Now, of course, taxes are a very complex thing, and each candidate's tax plan is a bit more complicated than what we really have time to get into in this relatively short video. So what I'm going to do is just talk about what I think is the most important factors in each candidate's tax plan. So we're going to be comparing each candidate's individual income tax plan, corporate income tax plan. We're also going to be talking about each candidate's plans for the estate tax. So here's an image that is comparing the individual income tax plan of Donald Trump against the individual income tax plan of Bernie Sanders. Now, first of all, I just want to take a couple seconds just to define a few terms that we see here in these charts. So the first column in each chart is the income tax rate. So this is the percentage of your income that you are going to pay if you fall within the particular range listed in the same row. Looking at the Donald Trump chart here, if you file as single and you make between $0 to $25,000 of income, then you pay zero taxes on that. But if you make between $25,001 to $50,000, then you're going to be paying 10% income on your income. And now this is a very important point to make here. So listen up. That 10% rate that you're going to pay, if you made $30,000 in Trump's tax plan, so you're only going to pay 10% of $5,000, which is $500. In other words, that first $25,000 is still going to be completely untaxed, but after that, it's all going to be taxed at that 10% rate until you get to $50,000. Then if you make any more over $50,000, you're going to have $25,000 taxed at that 10% rate, and then any of the excess over $50,000 is going to be taxed at that 20% rate. So I just wanted to get that out of the way so that is understood, because that's actually how tax brackets work in general. So what I just described, that's not just for Trump's tax plan, that's for the current tax plan we have in place, and that's going to be for Bernie's tax plan. That's for anytime you see a chart like this with a tax bracket, that's how it's going to work. And another important term we want to define here is the capital gains and dividends. So what that is, that's just the tax that you have to pay on any profits you earn from stock trading or from investments of any kind. So that's what the capital gains and dividends is referring to. And as you can see, that is taxed separately from your regular income. So I'm going to bring up another image now that has the same two tax plans you see here, but that is also going to show the current individual income tax rate that we have. So we can compare all three of those at the same time. So right off the bat, you're probably going to notice that Donald Trump's tax plan is quite a bit more simplistic than the current tax schedule, and Bernie Sanders' tax plan is quite a bit more complicated in that it has more separate brackets. You're also going to notice that in general, Donald Trump's tax plan at any given income level is going to have lower tax rates than the current tax rates. And you're going to notice that also at any given income level, Bernie Sanders' tax plan is going to have a bit of higher tax rates. And you can see that Donald Trump's plan has actually a 0% tax rate for single filers for a fairly large range between 0 to 25,000. For married, he has the 0% tax rate for 0 to 50,000, and for head of household, the 0% tax rate for 0 to $37,500 income. And you'll see that with his tax plan, that the highest income tax rate at all will be 25%, and the highest tax rate for the income on capital gains and dividends will be 20%, and that's for $150,000 and up. So that could be a huge range, whether you make $30 million or if your income was $160,000, you're still going to have that 25% income tax rate. On the other hand, with Bernie Sanders' plan, there's a lot more levels to that. As you can see, Bernie Sanders' plan, the maximum tax rate you could have would be 54.2%, and it's also 54.2% for the capital gains and dividends tax rate, and that's for if you had an income of $10 million and up. And he also has different tax brackets for 2 million to 10 million, for 500,000 to 2 million, and for 250,000 to 500,000, and so on. He just has a lot more tax brackets than Donald Trump's plan. And the current tax plan is, well, it's pretty much somewhere in the middle between the two candidates' plans that we're talking about. Now, feel free to pause that image if you'd like to look at each of those tax plans and the current tax system we have for a longer amount of time. Because now we're going to switch over to look at each candidate's plan for taxing corporations. Now, this is going to be a big issue with this election. This is something Bernie Sanders in particular seems to be very passionate about, in that corporations need to pay more taxes. So here in the middle, you can see that I have put the current corporate tax rates, and you'll see that in the highest bracket for any corporation earning an income over $18,333,333, they're going to be taxed at 35%, and any corporation earning under $50,000 is going to have the minimum tax rate, which is 15%. Now, the corporate tax rates is where these two candidates really differ a lot. Donald Trump, on the one hand, has this exact quote on his website right now. It says, "No business of any size, from a Fortune 500 to a mom and pop shop to a freelancer living job to job, will pay more than 15% of their business income in taxes." So what that means is that the maximum tax rate in Donald Trump's plan for corporations will be 15%. And that's very interesting because 15% is currently the bare minimum corporate tax rate. On the other hand, Bernie Sanders, as far as I can tell, it's sort of hard to find information on his exact plan, but it seems that he does not plan to change the corporate tax brackets as they are now. What he is focusing on is really just implementing measures that are going to stop corporations from finding ways to not pay their taxes. And here's just one example from his website. It says he wants to end the rule allowing American corporations to defer paying federal income taxes on profits of offshore subsidiaries. And then he has a whole bunch of other bullet points on other changes that he would make to put an end to corporate loopholes. Now, here is something I found really interesting when looking at Donald Trump's website. He also has several different measures that he mentions on his website that he would use to try to put a stop to corporations finding loopholes to not pay their taxes. So, to me, it seems that Donald Trump is also sort of trying to do what Bernie is really focusing on. So in that regard, I think that both candidates agree. The big difference with the candidates here is that Donald Trump would make the maximum tax rate 15%, and I think that he just wants it to be a all around, any corporation, no matter what their income is, they're going to pay a 15% tax rate. I may be misunderstanding it, but that's the way that I interpret this. So now we're going to take a look at the estate tax. And some people like to call this the death tax. For those of you that don't know, the estate tax is the tax that you have to pay on any money that you inherit. But the estate tax only applies for any value over $5.4 million. So 99.7% of all Americans would never pay the estate tax. Currently, the estate tax is set at 40%, but the first $5.4 million is still going to be tax-free. So if you inherit $7.4 million, you're going to pay 40% on $2 million, and you're going to get $5.4 million tax-free. as you can imagine, Donald Trump and Bernie Sanders have two very different ideas on how to handle the estate tax. Bernie Sanders would like to introduce a bracket system. He wants to change that minimum exemption value from $5.4 million to $3.5 million. And according to his website, with that lowered number, still 99.7% of Americans would not be paying an estate tax ever in their lives. He wants there to be a 45% estate tax for any value between $3.5 and $10 million, 50% tax for $10 million to $50 million, and 55% for any estate in excess of $50 million. Donald Trump, on the other hand, just wants to get rid of the estate tax altogether. He wants there to be no estate tax. So again, I've really just barely dipped into the surface of these two candidates' tax plans, but I think with this quick overview, I have been able to give you a pretty good idea of what each of these candidates is about as far as when it comes to taxes. So just to review, Donald Trump has a very simple tax plan. He's going to make there be less tax brackets, and he's going to introduce a 0% tax rate for a fairly large range. And he's also going to make the maximum tax rate be only 25%, which is a lot less than the current tax rate of 39.6%. He also wants to set a maximum corporate tax rate at 15%, which is the same as what the current minimum tax rate is. So he really wants to lower the corporate tax rate a lot. However, he does have some plans on how to address the issue of corporations finding loopholes to not pay their taxes. And when it comes to the estate tax, he is not a fan. He calls it the death tax, and he doesn't think that it should exist whatsoever. Now, on the other hand, Bernie Sanders, when it comes to the individual tax rates, he wants to make a his plan is very complicated in comparison to Donald Trump's, and it is actually a little bit more complicated than our current tax system. He introduces several new brackets, and his tax plan tends to be on the higher end, where Donald Trump's is on the lower end. Bernie Sanders' individual income tax rates are in any income range a bit higher than our current system. When it comes to corporate taxes, Sanders doesn't seem to have any desire to change the current bracket structure as it is, but he does have a lot of ideas on how to keep corporations from avoiding their taxes. When it comes to the estate tax, Sanders wants to increase it most of all, and he wants to lower the minimum exemption level from $5.4 million to $3.5 million. So thank you very much for watching. I hope you all found it very informative, and I hope you were all able to learn as much as I did as I was doing some research before making this video. And if I got anything totally wrong in this video, which I very well may have, please leave me a comment or just dislike the video, or leave a like if you did like it, because I really do value your feedback. So again, thank you for watching. Have a good night.